Okay, good afternoon, everybody. It's lovely to see you all here and great to have such rich discussions on ESG or sustainability, and particularly how it links to sustainable finance. So we've got an esteemed panel joining us here today to really look at the question of who said that financing climate change was going to be profitable. So we've got not very long. Let's dive straight into the question. Perhaps if I go to you, Jonathan, first. What do you think? Is financing climate change going to be profitable? Over what time period? And what are the circumstances?
Look, I think we have to start by recognizing the magnitude of the transition that every economy and the world must go through in the real sector, in transport, in energy production, in the industrial economy, and beyond. And there's no doubt that the retooling of that economy to be carbon neutral, and it depends on the country and the part of the world as to what time frame we're talking about. In China's case, since I come from Ping An, I'll reference that the goal is 2060, and in India's case, I believe it's 2070. But even to get the rest of the world by 2050, we're talking about just an almost unprecedented transition. So that comes at a cost. But of course, against that, of course there will be profitable opportunities. If we're financing a hydro dam in China, of course we will structure that project to be profitable. There are many new opportunities that are emerging. This whole space of climate change ratings, which I think we feel is in a very early stage, I think creates profitable opportunities for service providers that are able to gather the right data, provide the right structure, create the right alignment with government, with supras, in order to make sure that those ratings really reflect reality. That's an opportunity. In our own company, we're doing, I think, an interesting thing, which is we have about 110 million credit and debit card customers. And we're offering every one of those customers the ability to create their own personal carbon account.
Okay.
And that lets that person, based on their spend pattern and a lot of other data we aggregate, actually know exactly what their emission footprint is. And we have all of these ways of helping people reduce their carbon output. Now, that's certainly a profitable opportunity for us. But I think all of these have to be weighed against what we're trading off if we're stopping financing coal, as an example, or financing high emissions, industrial production, etc.
Thank you. So that's a definite maybe depending on the circumstances. Kattiya, if I could move over to you.
It's going to be profitable, but it's going to take time. And I think we need to work together. All stakeholders in the ecosystem has to work together. And the other thing is that we have to be practical. We have to have a good balance and a backup plan, because we have to balance between speed of execution, the cost of it, and a lot of many things. For example, energy stability is very crucial. So if we want to accelerate the reduction of the coal consumption, we have to be sure that this other type of energy is available and sufficient to support our business operation and the entire world. Or, there will always be the trade-off between transition costs and speed of it, or the availability of the raw materials, or even in Thailand, for example, it's the complexity of the execution to the local context, which we are now still don't have it. And also the greenwashing. If we rush, we want to lend or to fund the manufacturer and to say it's green. We might end up in the greenwashing, which is not the real green. So we have to have a good balance, of the speed of execution, the cost, and be practical. And one more thing. It's going to be practical because I think our team attend the Stockholm event, and we know that there's 200 to 300 startups in the unicorn state to do the ESG initiative. And in that prediction, in that forecast, there will be at least another in the future 2 or 3 decacorn to address this ESG. So it's not a CSR, it's not the social responsibility initiative. It's a real business. So it has to be profitable, and you can prove by, all these startups have emerged and successful in this area in all, industry, cement or, carbon footprint or there's many things. So it's going to be profitable, but I think we have to work together, developed country, emerging market, and all industry and every stakeholder, regulators, enterprise, financial institution, investor, and consumer who is the buyer of the products. So it has to be it's going to be profit if we work together.
Okay, so it can be profitable as long as we collaborate and work together.
Yeah.
Mark,
So
how do you stand?
So I love this question, and I love the answers the other panelists have given. So Prudential is a very long-term business by virtue of being an insurance company and an asset management company. And we've got hundreds of billions of dollars that are looking for the right investments. So one of the lenses that we have in terms of when we're looking at investments is, what is the return we're going to be able to get? Now, one of the things I think that we and others in the capital markets will need to start working towards and thinking about is, what is the right cost of capital for some of the companies that we're looking to invest in? And one of the ways that we and other investor companies can play is to actually help some of these companies who have got green opportunities to have a lower cost of capital. Lower cost of capital means that the hurdle rate's lower, they can invest more, they can invest earlier. And we can collectively punish those companies who aren't leaning into this topic and this agenda by raising the cost of capital. But I think we may have to get used to a slightly different cost of capital in some of these early stages, especially with some of the newer technologies. So I think it can be profitable. There's a lot of banks doing a lot of great lending. I think one of the things, and we might get onto this a little bit later, one of the things we all need to be very mindful of is the risk of greenwashing. And then we're not investing something that actually is not really going to fulfill the purpose that it's supposed to fulfill. And one of the things that Ravi spoke so eloquently about this morning was the element of how can actually he build in, and we just globally build in, more of a connectivity between how our money is being spent and the end point.
So very true, and I heard all of you mention technology and innovation is going to be a big part of this, so that's a good thing to hear when we're here at the FinTech Festival. Mark, perhaps if I can stay with you. Prudential have recently published details about a just and fair transition. I mean, when you're starting to think of it in terms of climate change, how do you think putting people at the heart of a transition will change the financial dynamics, or will it change the financial dynamics?
So last week, we issued a paper on just and inclusive transition at Asia House. And one of the things I spoke about at COP26 in Glasgow last year was the importance of people recognizing that emerging economies are different. The starting point is different. And therefore, how you approach and how you allocate capital and how you hold people to account and what you should expect is going to be different. And one of the things we wanted to do ahead of next week, COP27, is we wanted just to reinforce an element of that message and put a little bit of structure around some of the thinking around a just and inclusive transition. Because it's not just about the environmental piece, the social piece is so important on that component. And one of our purpose as an organization is to help people get the most out of life by making healthcare accessible and affordable and making wealth management affordable and accessible. And one of the key ways to be able to do that is through technology. and by enabling people to access things, by democratizing insurance. So in Vietnam, for example, we have bite-sized cancer insurance products that sell for less than a US dollar, $1 per month. And that's the way you can start to socialize. You can start to give people greater support, start to educate people about the needs to save for the future, give them more of a sense in terms of the role that they can play, but also, a bit like David Attenborough was quoted earlier on, what is it that we're buying and how can we actually support the green agenda by buying the right products and by saying to people there's a demand for those greener products.
So do you have any indicators for a just and inclusive transition that you're looking at?
So we've been working together as well with the Net Zero Asset Owner Alliance and with the elements of the EU ASEAN Business Council on an emerging market transition investment aspect. That's really come up with 12 recommendations. Within that are a series of lead indicators that will give us a sense in terms of what people are doing. One of the things we were discussing before we came on stage was the importance, and again Ravi mentioned it, the importance of quality data. Because every company at the moment is reporting in a different way. Every company is evolving their reporting, and comparability within a company between years and between companies, between sectors, is incredibly difficult for investors to discern. So I think we need greater comparability. We need to create a greater mechanism and a greater standard, but that standard can't be the same standard throughout the world, because what Singapore may need may be different from what Thailand needs, Vietnam needs, the Philippines needs. So there needs to be a localization of that. And that's important to guide investors, because some investors today that hold shares in Prudential look at us and say, your holding, your WACC is higher than we expect in the FTSE, in the S&P 500. Therefore, we're going to penalize you in a cost of capital, not taking into account the fact that we have a Asian and African exposure. We don't have exposure in the US or in Europe. So there's a long way, I think, for the whole community to go, but there's a lot more that needs to be done with MDBs and other players to really work together. So I think this is going to be a multi-year process. As Jonathan said, the timelines we're working on, 2050, 2060, 2070, is very, very long, a lot longer than many CEOs on roll, a lot longer than many boards on roll. But this is crucial to the survival of the planet, and therefore it matters, and we need to do the right thing. And therefore, I absolutely believe purpose-led organizations are the way forward in terms of where and how capital should be allocated.
And we also saw that wonderful quote this morning about Patagonia, how they're turning to a for-purpose business. So it was good to hear you framing it that you think there may be differences between emerging and developed markets. Kattiya, K-Bank in Thailand, at the heart of emerging markets. What are the differences that you're seeing, and what are the challenges and opportunities that climate change will bring in a market like Thailand or more broadly in Southeast Asia?
Okay, just a little info of K-Bank for you to get to know us. K-Bank is a second largest bank in Thailand, and we got selected, to be included in Dow Jones Sustainable Index. We are the first Thai bank, to be included at that sustainable index for 6 consecutive years. So that's who we are. So and we view our roles into major roles. The first one is that we are the responsible corporate citizen. So in that role, we have to do good in our own part. So what we call is scope 1 and 2. We are committed to have a net zero in our own operation in 2030. And the second role is more important, even more important than the first one, which is the financial service provider, who provide the fund support the ESG transition to our customers. And we committed to have a 100% net zero in our loan portfolio in 2065, in line with Thailand aspiration. Too long, right? It's quite a long time.
That is a long time.
Yes.
Long time away.
Yeah, but I think we have to start now. Otherwise, we're not going to make it in 2065. why is the challenge? Right now, K-Bank has grant the loan and issue green bond uh, to a lot of customers and for our funding for ourselves. It's about 2 billion US, altogether, and it's quite a big amount for banks and for Thailand also. However, it's not even 2% of our loan portfolio. So we have to do more and do faster and do it together. And why is a challenge on that? Let's say as a financial institution, we have enough funding, for the customer. But in Thailand, our customer have a limited awareness of how the climate change or the ESG will impact their business, their current business, and their business opportunity. So we need to heavily and consistently communicate and also incentivize as a financial institution lower interest rate for the one who want to change, to transform to the ESG. And at that point, there will be the credit rating agency because it's require huge amount of new investment and expand. So the bottom line might be, a little bit lower than they expected before or earlier. So the investor has to understand that also. And in case that customer want to change now, we customer and the bank don't know what standard or what is the local context or taxonomy that we should meet or should adhere to. So we have to work with the regulators and the government to identify this before we can move forward. And as the K-Bank, we will be the leader, one of the leader, to try to work in the ecosystem, integrate with the private sector and the regulators and the government to finalize the Thailand integrated plan, including the prioritization of the sector, which one should go first, which one will be the no regret sector, that we should go after, and the taxonomy, the local context, and the measurements of the success, how we measure the success of this ESG transition, and finally, the amount of money that required to finance or to support this. So it's a huge effort in terms of emerging market, and I believe that it's can apply or it's the same in other countries in emerging market as well.
So, why do you think it is that the business sector aren't necessarily alert to the risks of climate change? You said that there needs to be further education. Are businesses not feeling the extremes of some of the floods, for example, frequently hit Thailand? Are they not seeing the physical changes around them? How is it different in emerging markets when we often hear that the emerging markets, particularly here in Southeast Asia, are most likely to be hit by some of the physical impacts of climate change?
I think large corporates, they're aware of that, and because they export a lot and there's a tension, from the pressure from the government and, all the international firms to make them change. However, the medium or small enterprise, they, the consumer, is one big player in the ecosystem. So if they still want to buy the same old products, they will sell the same and produce the same way to that. But however, statistically, according to the survey, Thai consumer also change also, but it has to be have a critical mass enough, for the enterprise to change. So it has to work,
Going back to the ecosystem, that
yes,
everybody has a role to play.
yes.
Jonathan, maybe if I can turn to you. So Ping An Group operates primarily in China. I mean, how are there different standards in China for how you're financing climate change? And more broadly, we've all mentioned standards. I mean, what is the role of standards to play here in looking at how we can finance adaptation for climate change?
Well, firstly, Ping An, as a a very large China-based financial technology and health company, certainly has the ambition to be at the forefront of the highest standards of ESG reporting and conduct. So within the climate change segment of that, we've done a lot of work to firstly make sure we measure as best we can our own scope 1, 2, 3 footprint, and secondly, to in our financing activities, whether they be investment activities analogous to what Mark described at his own company. Obviously, we have an enormous investment balance sheet. I think we're a $1.6 trillion balance sheet today. That excludes our third-party assets under management, which is another $700–800 billion. So, we have the ability to direct finance in a differential way. So we're beginning to do that, and we have a large bank. And so, very similar to K-Bank, we have the choice as to whether we want to invest in lending to the old energy sector or the new energy sector. I think the good news in China is that the government understands the challenge of climate change. I think you only have to look at this year's drought in China, where you had the middle Yangtze in Chongqing literally drained to the riverbed, and you had ships simply sitting on the riverbed, quite very large ships that could normally navigate those waters. So I don't think anyone in China needs persuading. On top of that, of course, you have the legacy of air pollution in major cities, most notably in Beijing still. Enormous progress has been made, but enormous progress is still required. So I think the good news in China is that the Chinese government totally understands this, and to the best of my knowledge, is very seriously committed to making change happen. So I think what we're doing in rating ourselves, in creating rating frameworks for other companies, and trying to be a constructive force in introducing not China standards but global standards to Chinese companies, starting with ourselves, and trying to direct our own lending and investment activities. That's happening within this broader framework. I'll just make another comment as well, which I think is some grounds for optimism. One of the nice things in a country like China is that once the Chinese government sets a set of objectives, they're probably capable of making change happen on a larger scale, faster and more decisively than just about anywhere else on Earth. And in Shenzhen is a great example where you have one of the largest electric car makers in the world. And if you go onto the roads there, and probably most of us haven't been there for the last few years because of COVID constraints, but if you go onto the roads in that city of 18 million people, you now have at least half of the cars are electric cars. That's enormous progress. There's enormous progress being made in wind power generation, hydro where that is feasible, and maybe more controversially for some people, the expansion of nuclear power within China, and the build out of gas as an alternative to coal. And of course, within coal, the use of high-grade energy coal as opposed to low-grade coals that are much more polluting. So I think there are grounds for optimism, but we shouldn't kid ourselves. Coming up to COP27, scientists are legitimately raising whether even the goals we have will achieve the objectives. The next question is, do the actions at the country level even get to the goals? And then, how does the corporate sector, the consumer sector, and government mesh together in this collaborative way that Kattiya was talking about to actually achieve those goals? I think we're still quite a way from making sure that all of those connections are clear, coherent, and dependable.
Exactly. So transition is going to have to come from the ground up. You definitely need the governments, the regulators, coming from the top down, but it's really the real economy companies who are going to be making this transition. So that really speaks to the role of innovation then. I mean, what are some examples of innovation that you've seen that can help this transition, whether it's particularly in climate change financing or perhaps innovation in the way people are thinking about how businesses can change and that financing can play a role?
I think green bonds is an obvious example. I think that's a massive sector now. It's a massive sector in China. I think it's led by institutional investors. I think the role that someone like Larry Fink at BlackRock has played is extraordinarily important. And I think we're seeing European institutions kind of very much in the same modality, increasingly Asian and over time more US institutions, as I think people become more serious about this climate consensus. So I think that's one area. In our part of our business, our property and casualty, of course, the effects of climate change on agriculture, the effects of climate change in regard to managing catastrophes driven by extreme climate events. These are a reality. I'd say at this stage, much of what is being done is government-led, and I think there is a lot of work still to be done to figure out, and I think I heard one of the previous panel speakers saying exactly the same point. There's a lot of work to be done in the insurance industry to understand how to underwrite the unpredictable, and to take these, what previously were viewed as low probability but high impact events. We would have thought of that as the long tail. With those things becoming more frequent and less predictable, how do we deal with that? I think those require public and private partnership innovations in insurance for sure. I think there's a lot that can be done at the consumer level. So the one I described with regard to our credit and debit card customers and the personal carbon statement, I think that's a fabulous thing. I don't know about everybody else in this room. I don't know what my personal carbon statement is. And I live in Hong Kong, so it's not covered by that particular program. I bet you most of us don't. And I bet you if we did in a rigorous way, we could start turning the dials in our own consumption in a much more meaningful and impactful way, to your point, of course.
And I was walking through the stalls earlier yesterday, and one of the companies, Ripper, had a glass jar on the desk filled with paper, and they moved to paperless systems and was asking people to guess how much CO2 equivalent was contained within that glass jar. And she was saying that the answers that came in were very varied. Now, we've got some questions that have come in through the Slido, so maybe I'll start and turn to this end of the panel. You were speaking earlier, Kattiya, but also you were speaking from Prudential perspective about inclusiveness, ESG. So the question is, in an emerging market, there can be unavoidable conflicts between inclusiveness and ESG. How do you manage these challenges? Mark, maybe for you.
So there can be an element of a conflict. A key component for us is about creating greater inclusivity, making healthcare more affordable. So people in rural communities, how can they access medical help in a quicker, more efficient, more affordable way? There is, though, the element that if we push utility companies too quickly, then energy supply and energy security becomes a real challenge for societies. So we need to find a way collectively to be able to balance the aspect of pricing, the aspect of security, and the aspect of supply all together. And within that needs to sit on a green chassis. And at the moment, we focus elements of the green chassis without actually focusing on enough of the disparate components. If there's a way, and we've been working with the ADB on an energy transition mechanism that provides a means to be able to accelerate decommissioning of coal-powered furnaces, so they can afford to be able to invest in green technology more quickly, and those coal-fired furnaces can be decommissioned maybe 10, 15 years. Naturally, it might be a 40, 50-year process. And in that way, we can actually deal with the degree of inclusivity. But it requires greater degree of ingenuity. It also requires, I think, to the technology and innovation point, it requires some of the technological advances that have been made in the West and rolled out in the West to be shared with developing and emerging economies at a price point that's appropriate for emerging economies.
I think that price point is so
And
important.
that is so key.
Kattiya, from your perspective.
I think ESG has to go together. Environment, social, and governance has to go together hand in hand in order to make it happen. And ESG can happen everywhere. If we think, for example, as for KBank, we do a little innovation, for the EV bike. EV bike is like we want the lower income, who ride the bicycle, to change to the EV bike. However, there's a pain there that, they need to recharge this motorcycle. So we create the machine who have a battery slot, that available for all the brand of that motorcycle. So it's a chicken and egg. You have a charging station or battery swap station first, and then people buy EV bike. So that's what we create, and we have like more than 800 branches in Thailand. I think more than half of it is in Bangkok. So at least statistically, from data analytics, we need to have at least 70 station in order to make scale, and people will make decision to buy EV bike. So that's what we do, and that's one kind of inclusion that is ESG, that apply to the middle income or the lower income class. So that's the ESG can be inclusive also. Yeah, but we as a system integrator, orchestrator, have to do that first. Yeah.
Yeah, so you need the infrastructure first to enable people to make that transition.
Yeah.
Jonathan, maybe I'll direct this question to you. With Ping An Group, I assume you work with many small to medium enterprises. What's the main motivator for SMEs to move towards more environmentally friendly or climate friendly practices?
Yeah, well, I think Kattiya spoke about this, I think, in the Thailand context, and I don't think it's that different in the China context. I think it's one thing for large corporations who have access to government, whose CEOs are on international panels and intergovernment agencies are in touch with intergovernment agencies, who have professional sustainability staff on hand to make sure that the strategy is clear and all the rest of it, who are the subject of these rating agencies, who are either doing a good job or maybe can do a better job in rating ESG going forward. So you're an SME, it's hard enough to run a business and to survive as an SME. You don't have any of that infrastructure or those resources. I think most people get the challenge of climate change. I don't think most people need to be fundamentally persuaded. There might be a few fundamental deniers left out there, but there must be pretty few. So I think what is needed is, I think, a lot of help and a lot of platforms that can help SMEs actually figure out what their footprint is and what the levers they have to be able to manage more efficiently. And I think within that you need incentives. That's going to have to be a public and a private partnership effort to direct people's spend and resource consumption in particular towards lower emissions channels. So I think this is a very important and to date largely unaddressed question.
It's true. Mark, did you want to come in on this?
Two quick things. For the main motivator, one, customers. Customers are going to be asking for it. Customers are going to be asking for the products to be done in an ESG-friendly fashion. The second is quality of staff. The millennials and the like want to know they're working for a purpose-led organization, and they want to know that what the company is doing makes sense, and as ESG agenda is a bigger thing. So to be able to get the right people to be able to serve the customers, I think SME leaders and owners are going to have to get on the ESG bandwagon if they're not on it already.
It's very true. Now we're just about out of time. Final, very quick question. It wouldn't be a panel on ESG if we didn't address greenwashing in some way. How can we prevent greenwashing and make real progress on addressing climate change, which is ultimately the impact that we're after? Just in one sentence. Mark, we'll start with you.
Extreme filters and before any investments are made, and rigorous follow-up in terms of investments once they're made to ensure they're doing what they say on the tin.
Excellent.
Okay. We have to enter to this ESG effort with the game-changing mindset. You know, we have to set the real target that reflect the real green effort. So and follow up on that. So agree. Yeah.
Jonathan?
And I'd say the analogy is financial accounting standards. We have IFRS, we have accounting bodies in every country. Those bodies have teeth. They're enforceable by the SEC and their counterparts around the world, and we need the same thing for climate change.
Okay, excellent. Well, thank you very much to our esteemed panelists. It's been a great conversation. What I've heard is that financing climate change can be profitable as long as we collaborate, we look at the time frames, and we really do start to look at our impact. Thank you very much. Thank you, audience.
Thank you.